right. Good morning, everybody. Welcome to the morning show here on Stock Market TV. Spencer Israel, JC Parets, Steve Strazza with you. Glad to be back. We missed you guys yesterday. We got a lot going on here. Uh, got some things to talk about. The market has been let's call it interesting, right? I mean, I guess it's always interesting, but there are degrees of interesting, right? And it's been more interesting lately, which is kind of exciting. But we have some things to discuss from a chart standpoint. We have some breakdowns and some bearishness and that's all fine. And we'll talk about it. We'll put it all in context and make sense of it all. Let's see. We have Dell this morning. Ouch, not looking good there. And then I don't actually know what is on Steve and or JC's minds this morning. So it'll be a surprise to me too, whatever they want to talk about. I'm sure it'll be, what you want to talk about, which is sort of everything, right? So today we're going to be having Ryan Detrick on the show, the chief market strategist at Carson Group. We'll have Louis Sykes on the show. It's Crypto Friday. So man, what a week for crypto. Oh my goodness. More of the same, right? We'll have Kenny Glick on the show. We'll have Alfonso. We got a lot going on today. I'm going to stop talking. We're going to bring the guys on. We're going to smash the like, and we're going to go right now because we have way too much to do and not enough time to do it in.
All right, we back, Mr. Strazza. Did you miss us?
I swear to God, Spencer, I just ate an entire breakfast sandwich in the time it took you to ramble through your introduction.
It was quite the ramble. You had plenty of time. You had a lot to say.
Were you doing that on purpose? Like, did you see me? Was that teamwork?
No.
Oh, okay. For a second there, I'm like, maybe he knows.
What were you eating, you fat fuck?
A Dunkin' sandwich, dude.
Jesus Christ. Dude, I was with Perlman all day yesterday.
Oh, yeah?
I was actually telling him how, I didn't mention the morning croquetas that you're regularly bringing out here. I kept that to myself. I did tell him you were doing great, how much money you're making. He's very proud of you. Very proud of you.
You told him that? Thanks. Did you guys eat healthy with Perlman? What'd you guys eat yesterday?
We did not. It's funny because we were at the hotel for the cheesesteaks. You know, the cheesesteaks I like at the old hotel.
Yes, you took.
Oh, him and I are walking. It's like noon, 12:15, and like I put my arm around him as we're walking into the restaurant. I was like, "I'm gonna order a Philly cheesesteak and French fries. Are you gonna judge me?" And like,
I don't want to hear a word.
But like deep inside, he's like, "What a schmuck, this guy."
Yeah. Sitting there shaking his head at you.
Dude, Spencer's ordering like clam chowder.
Wait, no. We were at a restaurant and we were at the bar waiting to sit down. This is last night. It was just me and Phil. Nobody else.
JC was already talking.
No, JC was not even there. It was just Phil and I. And we sit at the bar. We're waiting for everyone else to show up. And they give me the menu, and I'm looking at maybe I want a bottle of beer or a glass of wine.
Yeah.
And Phil is just staring, and he goes, "Why would anyone ever drink alcohol ever?" And he goes, "It's poison." And I'm like, "Oh God."
What are you gonna drink with oysters? You're gonna have water? What kind of serial killer is gonna drink water with their oysters?
I was like, what can I do?
He used to love soda too. Phil was a big soda guy. He's off the soda too. So yeah, what is left to drink? Look, water's the best beverage, though. I'm putting down waters like out here, just left and right all day.
Water's good for my kids only drink water. They don't drink juice at all.
It's good. That's great.
No, it is. It actually
is Gatorade
like juice, which is fantastic.
Gatorade's full of sugar too. It's terrible.
Gatorade will kill you, man. Gatorade will kill you. All right. So I've been monitoring the markets obviously over the last couple of days. Been deep. A lot of business papers. A lot of Danny Jassy. So, I get a gold star for dealing with Danny for 2 whole days. 2 whole days.
Wow.
Impressive. Oh.
Better you than me.
Someone's got to do it, man. You know, God bless him. Even Morgan's like, how do you deal with Danny? I'm like, you see, I told you.
All right.
Like, he's like a robot. I'm like, yeah, kind of.
All right, enough of that. We're talking to markets here.
All right, ladies and gentlemen, we have the Dow futures up 224 points this morning. That's 0.5% to the upside. 43,500 for the Dow Jones Industrial Average. S&P 500 futures up about 1/3%. 18 points, just under 5,900. NASDAQ 100 futures up a little bit. 24 handles to the upside. 20,630 for the NASDAQ 100 futures. 30-year bond futures up a little bit as well, pushing 118 to the upside. Crude oil down 1%, just under 70. Copper down 1.3%, 455. Gold down 1%, 2870. Silver down 1% as well, 3175. With the VIX just under 21. Elevated VIX here over in funny money land. Bitcoin getting the shit kicked out of it, 81,400. Big ups to Steve Strazza for calling this decline. Down 3,300 points. That's almost 4% to the downside today. Ethereum down almost 7%, 2,150, getting the crap kicked out of it as well. Solana continues to be a massive disappointment, showing some relative strength today, well off the lows for Solana, just under 140. Very impressive action on the overnight session from Solana. And of course, total crypto market cap, Mr. Spencer Israel. Are you ready for this?
Oh,
2.65 trillion. Holy cow.
So we said Bitcoin, I don't know if it was yesterday or the day before, was on here saying could be 70s by end of the week, right? We saw it moving fast. Momentum came into this trade last week, really. Bitcoin just followed everything else. Is Ethereum the most concerning one at this point? Like, Ethereum's gone.
Ethereum, is it really concerning? I mean, it's been the worst for quite some time. I would say the weakness in Ethereum is not a surprise. I will say that the reversal in the overnight session in Solana, I don't know if it's a surprise or not, but is impressive, I will say.
So the new levels for me, for Bitcoin specifically, you have those old VWAPs from the 2024 range last year before we had the pre-election breakout and ramp. They're coming in around 75 to 81. If you go WAP that range out,
throw up that slide too there, and then we'll wait for the rest of the Bitcoin stuff for Lou Dog to come over, but throw that up there.
I was thinking about just getting some live charting on today.
It might be one of those days.
That's just the mood I'm in.
It might be one of those days.
No, I mean, listen, I think that this is this is classic, right? So, for me, it was one of those things where it's like, okay, if we break out above that 102 level, I really want to get aggressive, kind of like we got aggressive above 31, kind of like we got aggressive above 70. That never happened. So now we're in the box where it's like, okay, if we get into the low 70s, and I have no idea whether we do or not, but as we spoke about earlier this week, if we get into the low 70s, is that a buy? And then you add to positions on a breakout above 102, like you put a quarter position, a third of a position, half a position. Again, I don't even know if we're going to get into the low 70s, but if we do, I'm highly considering it.
I'm not just buying levels. When I get back in, I'll be buying bases. Right.
Got it. Okay. So that's kind of what I was getting at. Like, do you want to buy dips into 70s, or do you want a base to develop? Like, give it time. I need
time. I need time at this point. Dude, this action has been nasty. You know what the truth about crypto is? If you look at the altcoins, the more you look, you'll find it's been a bear market since November. A nasty one. Some big altcoins out here down 60, 70. Bonk is down 80%. Since like late November. Like the whole space has been absolutely destroyed, and now Bitcoin's following. So I think you have to really be hands off for a little while here. Let this smoke clear.
All right, let's look at some equities, and then we'll get back to crypto when Lou Dog gets in here. Let's look at the S&P 500. Let's look at the NASDAQ. Let's look at the Dow. Let me just remind everybody, ladies and gentlemen, I don't know if you realize this. very big deal, Mr. Strazza. This is like Christmas, Hanukkah, my bar mitzvah, and birthday, like all in one today. We got daily closes, weekly closes, we got monthly closes for equities, for futures, and for crypto, all on the same day.
Yeah, that is a big deal. That's a special day. Yeah.
So do you know what I'm going to be doing this evening, ladies and gentlemen? You know what I'm going to be doing?
What?
I'm going to put on maybe a little Tribe Called Quest. I'm going to open up a 10-year-old Barolo.
Nice.
And I'm going to sit there and I'm going to look at, I don't know, 500 to 1,000 charts, probably, if I had to guess. So that's what I'm doing tonight.
Yep.
When the kids go to sleep, put Morgan down. Morgan joined us for dinner last night.
Are you looking at more charts because you're feeling increasingly cautious just based on the recent action?
I'm looking at a lot of charts because I don't know if you heard, daily, weekly, monthly, equities, futures, Forex, crypto, all on the same day.
But you might be looking at like a couple extra risk appetite charts or stuff that you pull up when the market's looking toppy. You got any of those go-to charts? No? Okay. All right. Nothing changed.
I don't think it's going to be any different. Like, I'm not necessarily, I'm probably going to be counting new lows. I'm going to be counting new highs. I haven't peaked. I peaked a little bit like Monday or Tuesday. I took a quick little peek. I don't know if you've peaked. But let's look at some of the weekly charts. Let's stick with the weekly, then we'll talk about the monthlies. We got our conference call Monday night. So, ladies and gentlemen, if you are not a premium member of All-Star Charts and you're not going to be there on Monday, you are missing out. Spencer Israel, if you could share with the folks where they need to go to join us on Monday evening's strategy session. This is my favorite thing that we do here. That's probably my favorite thing we do here. All right, so we're looking.
What the best monthly is going to be. You already know what the best monthly is.
The best monthly chart. Do I know what it is? I could probably tell you already what I think.
Go.
Euro Stock 600.
Okay. Because it's going to be a nice breakout stick. I was thinking it's got to be something China, just because there's massive candles.
Oh yeah, you're not wrong. You're not wrong. I'm thinking you're probably right. It's probably going to be a decent monthly there. Rudy wants to know, is it always a Barolo for the monthlies? No, but Barolo Fridays is like a thing.
Only when it's a bull market, Rudy.
No, I mean Barolos are like a Friday thing.
Oh, okay.
I was drinking Barolo on Tuesday, but
What's champagne? Champagne's a Sunday morning thing.
Dude, we were drinking champagne last night.
Oh, nice.
Yeah, we were drinking some champagne last night. We were drinking Super Tuscan. It was nice. All right, S&P 500, guys. This is an uptrend. Higher lows, higher highs. In this range, right? So this week hasn't changed anything for the S&P 500. This month hasn't changed anything for the S&P 500. I know we got Ryan Detrick coming in the house today. I'm curious to hear his thoughts, but just very simply, I don't know what's happening with your government or your economy or your jobs. I mean, the only employment situation I'm interested in is my own. So I'm not really sure what everybody's freaking out about. I can't wait to talk about sentiment with Mr. Detrick. I know he's an avid watcher of that. Very curious to hear his thoughts on why everybody's so scared and all upset. It's really
hold on. But wait, let's be fair about what's happening right now. We lost cryptos in a big way earlier this week.
Oh my God, we lost cryptos, like an asset class that we pretend matters.
A bunch of smaller areas of the market were hit really hard last week coming into start this week, right? And then there was just nasty follow through. The bounces that we got were really nothing. There were no bounces, right? Just relentless selling pressure. And what were we saying coming into the week? Well, if the rest of the world didn't look so darn good, this might be concerning, right? Well, maybe NVIDIA will report earnings and save this whole thing, right? So we're little by little losing everything that we have as bullish evidence, right? But by the way, NVIDIA didn't save it at all. It was down 8% yesterday. And now I wake up and I look at what's going on in Asia. Every single stock market, every single index in Asia is down 2-3% today. Absolutely slammed. Those are that's the leadership. So Europe is pretty much on an island by itself in the bull camp right now. If you lose Europe, I don't know really what you have to point to. I don't think it's like a nothing to see here situation.
Can we just stay in America?
Fine.
Going off the rails. S&P 500 still in an uptrend. Nothing changed this week. Nothing changed this month. Go next. NASDAQ 100. Here we go. I love how the Qs got slightly cut off there. Here, let's fix that. Let's fix that.
These are the triple O's. The ooh.
Triple O's. The triple
This is
O's.
the ooh.
There you go. All right, refresh that. So this is the big one because 500 on the Qs is actually a really big level, right? Big level on the Qs. We lose that, Strazza. We are now back below those former highs. I think that's a problem. Qs below 500 changes trend, right? S&Ps are not at those levels, but the Qs are, right? You see the difference there?
If you're talking to me, yes, I see it.
At 500 level on the Qs, and here we are this morning. I mean, we are right there. We are at 501. Yesterday's close was 500 spot 27. So that 500 level is a big one. I will be the first to tell you that if the NASDAQ 100 loses those levels, and I've been saying it since probably Q4 last year, that's the big level. We lose that, and that's a problem. Strazza, do you agree with that?
Yeah, and it's going to lose it. Can I tell you why?
You think it's going to lose it? You think we're going to lose that 500?
Yep. It's going to lose it, and it's going to break the VWAP from the August lows next, which is right around 497.
You got a little bit of a bearish divergence there on the daily time frame with those new highs that you got last week, not confirmed by momentum. On a weekly time frame, by the way, Strazza, the Qs never got overbought on this last leg higher throughout like November, December. I don't know if you caught that. No overbought conditions on a weekly time frame.
Momentum's been waning even on a daily time frame. And you know what is oversold already and is breaking down below the August low VWAP and is breaking that little support level that you're talking about in the Qs?
What?
Its equivalent level, the Magnificent 7 index.
The Magnificent 7 index.
Yep.
Okay.
So,
all right, now look at the Dow. The Dow, like the S&P, not as vulnerable as the Qs.
Okay.
Right? Not as vulnerable as the Qs. The Qs are literally right there. So for me, the Qs are the leading indicator. If we lose the Qs, I have a hard time believing that we're not going to lose the Dow and the S&P.
You lost the Mag 7. Is that not the leading indicator for the Qs?
I don't care
So
about the Mag 7. That's like a made-up thing. That's not a thing.
Listen, speaking of made-up things, I don't think I know anybody who even owns these stocks anymore, Dow Industrials. So
you don't know people who own the Dow Jones Industrial Average, really?
No.
All right, let's go down the list of stocks in the Dow Jones Industrial Average. And guys, you could weigh in and tell me. So Apple, nobody owns Apple, right? Amazon, nobody owns Apple. Nobody owns Amazon. Goldman Sachs, nobody owns that. McDonald's, Microsoft, nobody owns any Microsoft. Nobody owns Nvidia, according to Steve Strazza. Nobody owns Salesforce. Visa, Walmart. Nobody owns any of those stocks.
Nobody better own Microsoft below 390. Holy shit. Look at this chart.
Listen, the Dow Jones Industrial Average, I continue to pound the table, is the world's most important stock market index. Facts only. And if you don't like it, tough shit. When you grow up, maybe you'll understand. I'm not talking to Steve, but some of you out there in Haterland, when you grow up, you'll understand that the Dow Jones Industrial Average is, in fact, the world's most important index. And I will tell you this: if the NASDAQ 100 loses that 500, I have a hard time believing that the Dow is not going to follow.
I think all these indexes are on breakdown alert. They look so much better than the market beneath them.
Maybe. But I think the breakdown alert comes when something actually breaks down, and we still don't have that. But if the Qs lose 500, I think that's step one, and I think the others get into breakdown alert in that scenario.
Bitcoin didn't just break down. Magnificent 7 doesn't matter to you. That
Bitcoin doesn't matter. Bitcoin is a rounding error.
XLK is hitting its lowest level since October.
What else is new? XLK has been underperforming for 8 months now. What else is new?
Speculative growth stocks are.
I will tell you this. A high beta, low volatility, on the other hand, that includes a lot of technology. That, to me, like you were asking me, are there any like special risk on, risk off ratios you're going to be looking at after the close? And I wouldn't say I would look at it every day after the close, to be honest with you. But like if there's any like risk on, risk off situation that I think is front and center, I think it's a high beta, low vol ratio.
What a nasty failed breakout that was in discretionary staples. Speaking of risk appetite.
Sure.
What a nasty failed breakout in just consumer discretionary on absolute basis. Weren't you saying that was a big one? You didn't want to
I
lose
still
that
think it
level?
is. I agree wholeheartedly. Yep.
I mean, so that's ugly. How about the failed breakout in the strongest European index, the Fez?
Here, I got one for you.
The more you look, the worse it looks out here right now. It's a time to really protect your capital and keep your stops tight here. And
Here,
I
throw up the
time
new
to be
slide
aggressive.
too.
I don't think you want to try to catch a falling knife in any of this stuff.
Listen,
Market looks good.
don't get mad at me for my diagonal trend lines, but I just couldn't help myself on this one. Just feels too clean. Too clean. I can't unsee it.
I'm okay with it.
You're okay with it. You'll let it
I'm okay
slide.
I'm okay with it. I was drawing some diagonals this morning. Look, it's one of those markets right now where you're drawing some multi-year trend lines on some charts.
Well, this trend
you are.
line, to be fair, has been there for a long time. I just pulled up the chart. The trend line was already there. But isn't it fascinating that you broke the trend line, you kicked back? And again, I'm more of a horizontal trend line guy myself, but from a diagonal standpoint, I mean, this to me is a big one because you're looking at, for high beta, you're looking at half that index is technology, and then another like 20% or so is consumer discretionary. And then in low vol, you got a lot of staples and utilities and a bunch of that stuff.
JC, what are the odds, in your opinion, that the bull market is over and that we've seen the top for this cycle for
Slim.
U.S. stocks?
Very slim.
Okay.
Good question.
The bull market is over.
I'm just saying, what are the odds that we've seen the cycle highs for the U.S. major averages?
Oh, thank you, dear.
Oh, she brought me one too. Cheers,
Morgan,
buddy.
MVP yesterday. Morgan shows up after all the work was done. She just shows up, orders her Prosecco and her octopus, and just like, you know.
If I knew Morgan was going to be there, I would have came.
To be fair, none of us knew whether she was going to make it or not, because she's busy with a zillion kids that we have. But she made an appearance.
Hey, I want to bring Louis on.
Primary trend, Dawson. Primary trend. Throw 200 on. That's the cycle.
Can we talk crypto with Louis?
Please. Let's talk about the most irrelevant asset class in the world.
Don't tell him that.
He knows. It's just math.
Now,
That's great. I'm watching from the backstage, and it really reminds me of August of last year. And I just remember it almost just looked like you and Steve were just going at it. You're just trying to get under his skin. It's hilarious to watch from the backstage, I gotta say. I love these episodes.
I don't think Steve and I are really disagreeing on anything. He's telling me how important crypto is, and I'm just showing him the math that it is irrelevant. It is a rounding error at best. Yeah. That's putting it nicely.
Now it doesn't matter anymore.
It never did.
You know what you're doing. You know what you're doing.
First of all, as somebody who's been trading crypto since the two of you were in diapers, I can tell you for a fact that it is completely irrelevant. Every single cryptocurrency can go to zero tomorrow, and nobody who matters will care. It doesn't matter. It is irrelevant. Now, with that being said, there's nothing you can make money in crypto. We have, we have. We will again, hopefully. It doesn't matter. Louis, can you tell him?
Would you agree that crypto breaking down in the magnitude that it is points to something that's a little bit strange about what's happening with this entire growth story, right? Bitcoin wouldn't be breaking down like it is if things weren't actually as bad as they are right now.
I'll give you that. The growth, the high beta has been moving with cryptocurrencies. So there is a correlation there. No question. That doesn't mean that crypto matters. We know it doesn't. But the correlation that you're describing, Louis, I think you're spot on. Yes.
So let's talk about it. So, I mean, I was watching the show a few days ago, and you were talking about, do I buy this dip? If it gets back to 70K, are you going to back up the truck? And you weren't very, very certain about that. So, has your thinking about that changed? Where's your head?
No, I'm glad you brought that up, because it wasn't anything that I was really thinking about, right? Until recently, because the data has changed. For me, I was gung ho on buying a breakout above 102. We've talked about it. Like, that has been my trade, and I've just kind of been sitting around waiting for it, looking for some of those leading indicators, like Solana maybe breaking out first, right? Like, that's where my head was at. Now, my head is not there anymore because it's something else now. So now the question is, okay, great. Like buying a breakout above 102 is just not, that's not a practical strategy anymore, right? Because like we can't do that yet, right? There are other things that need to happen first. Maybe they recover and get back above that 90 level. That would be step one. And maybe in that scenario, I'll go back to my flip the book long above 102 thesis, right? But that's not the case now. We're below overhead supply. We're well above former resistance. So the question is, and again, I was asking the question kind of here what Strazza thought. He doesn't like that strategy at all, which is, I guess, a little surprising to me. I thought he'd be more gung-ho about buying that dip into the low 70s. I'm probably more enthusiastic about that opportunity than he is. And by the way, I have no idea whether Bitcoin's going to get to the low 70s or not. So this discussion might also be irrelevant, right? So if we get to the low 70s, you know, I don't disagree with Strazza. Like instead of trying to catch a falling knife into the low 70s, let it stop, let it start to base, and then buy that breakout. You know, he's probably right. That's probably the better move.
Yeah, I mean, it's a little bit of perspective is in order for me here because I'm just so in the weeds with this. I'm trading these things every single day, right? So for me personally, that Bitcoin retest at 70,000 is just a no-brainer buy the dip opportunity. But then I understand that
But for what time horizon?
but I understand that there are others out there who crypto makes up a smaller portion of the of your portfolio, which is the overall and the overwhelming majority of investors, right? So waiting for that momentum to return is perfectly fine in your case, right? But for me, for someone who's in the weeds with all of this, I think buying that dip at 70K is a really, really clean trade. I'm certainly going to be the one doing that.
So hold on. So the question is, first of all, we're like thinking like 4 steps ahead. We have no idea whether Bitcoin's going to get into the low 70s or not. But hypothetically, let's say it's Saturday night, right? Or Sunday morning or something. I'm making up a hypothetical situation, but shit is hitting the fan. Cryptocurrencies are getting destroyed, and you got Bitcoin at 72,000, let's just say. Do you think it's more prudent to just buy the Bitcoin there on that dip versus what Strazza is suggesting, like let it chill, let it start to base, and then you buy it on the way up? You wouldn't rather do Strazza's strategy there that I'm leaning towards, by the way, versus blindly buying the dip into the low 70s? You'd rather just do that?
I mean, you a retest of this magnitude, right? We don't just tend to retest a big level of support like this and just immediately just go off to the races. What tends to happen is we tend to base and we tend to, as you say, form this base, form this sideways consolidation around this big level of support. And so I think, you know, me personally, I'm going to be looking to average in if we do get this retest, right? Potentially averaging in with a smaller portion, a smaller trade around the 70K level, and then potentially adding to that as it's basing, and then you can have your stop below all that support. That makes sense to me. You can either buy the momentum from this base breakout if it does form this base. I think that's a bit more of a shorter term momentum play. What I'm looking at here is just a longer term play with this massive base retest. Again, with the big caveat is if we get it.
But I think the argument to just buy that dip into the low 70s is that you're going to get that V reversal. Again, I think I'm in Strazza's camp. I'm in Strazza's camp. And again, earlier this week, I didn't come in with a strategy because it was sort of like a new situation. I was mostly just asking, like, what do you think? You're going to get to the low 70s, you flip the book long. You know, what I don't hate is maybe you get into the low 70s, you wake up on Sunday morning, Bitcoin's at 72, you put on a quarter of a position or a third of a position.
Yeah, that's
right?
what I'm talking about.
And then maybe
right
you let
here.
it base and on a breakout, like Strazza's saying, then you put on another quarter position or a third of a position. The trade of all of these that I like the best, and I still like the best, but you know, I don't always get what I want, is a breakout above 102. Like that's really what I want. Right. But it's irrelevant right now.
And I have a different way, I think, to answer your question. It's not about buying Bitcoin. I'll cover my MicroStrategy short, though, right? If Bitcoin stabilizes here in this VWAP range, if we get down to like 75, we start testing those old range highs, I won't be short MicroStrategy, right? Whether or not I'll be adding long exposure back, probably not this soon. I would love to come on here next week and say, you know what, guys, I was wrong. This thing ripped in my face. The market's, repairing all this damage. We're undoing these tops. It's game on. I'm back in, right? That would be great. I hope that happens. Honestly, I don't see it
Can you
happening.
talk about the liquidations? Let's talk the on-chain data. So in TradFi, we don't have this kind of data. We don't have this kind of transparency. We can assume, and we do, certain like liquidation events and things like that because it seems quite obvious what's happening. But in cryptocurrencies, we actually know. Spencer, can you throw those up? Throw up the Ethereum liquidations and the Bitcoin liquidation. Let's talk about that. Can you walk us through what's happening here?
Yeah, so just a small correction. This isn't on-chain data. This data actually comes directly from the exchanges itself. So it's not taking place on-chain. It's actually taking place on the exchanges. And so right now we're in a
So
period.
then these are the exchanges. So then how is that math calculated? Are they just giving us that data?
Yeah, they're giving you this data of the amount of traders that they're essentially margin calling on futures contracts, right? So we're in a period right now
We're
of
not
really
getting that
high
in
liquidation.
TradFi.
I don't really know if you're not. If you aren't, then that seems like a bit of a problem to me. But regardless, what we're looking at here in Ethereum is that we had that massive wick, right? That massive sell-off, and you got that massive push of liquidations. And at that point, I said, hey, look, things are looking really quite good in crypto. And I like buying this dip. There's a clear level of support here. We've got Ethereum against 2000, which I still think that against 2000, I still think ETH is more of a long than a short here. So long as we're above 2000, there's a strong level of support. And we're in this context of traders getting liquidated at relatively high levels here. And the same applies in Bitcoin. Obviously, in this case, it's a little bit different, right? Bitcoin has clearly lost support. And so I don't think there's any trade to be made here, at least right now. But what I can say is that these periods of high liquidations tend to occur near the end of one stage and before the beginning of another. So in other words, these liquidations tend to mark the climaxes of these selling. So I think it's really interesting data to look at to see that the worst traders on the planet are being taken behind the barn in just record numbers right now.
The worst traders on the planet are taken behind the barn. And what's happening to them behind the bar?
Nothing good, JC. Nothing good.
And taken behind the barn. You guys have a lot of barns in New Zealand?
We don't actually. Well, we call them a shed. We don't really call them a barn. That's a
Isn't
very
a shed
American
just a
term.
smaller barn?
Did
I
he?
mean,
Did he just ask you what they're doing to him behind the barn?
Yeah. What are they doing to them?
that's a family show, JC.
Yeah, no comment there.
All right,
It's a
All right.
legit
Louis.
question. What does that have to do with family? Is this did you guys like assume something naughty? I don't know. I'm asking. What's going on behind the barn?
It's implied.
People want to know how to manage their risk in crypto right now. I have a question, a big level. Tell me if you think it's super important, like I do. Solana 120, right here. It just touched down to the level. It's a massive distribution, potential distribution formation. That's the support line right there. Digging in for now, holding. If Solana's red by the end of today or come tomorrow, right, breaking down below this little, it's tagged that line now, here today, yesterday, whatever. This chart's a little stale. If it breaks, and this is a massive top in Solana, the selling pressure, like right now, over the near term, I think can get a lot worse, a lot more severe.
I think it would get significantly worse. If Solana loses 120 and Ethereum loses 2000, I think that a significant short-term sell-off is a very high probability.
Okay.
So those are very important support levels to hold. But then
Right.
alternatively, so long as we're above those, I think taking a shot more on the long side rather than the short side makes sense.
And those are some great lines in the sand that you can use right now. We're right there, right? Just to kind of, manage your risk, and kind of guide yourself through this volatile time in crypto.
Yeah, precisely.
Okay.
Good level. Good chart.
All right. So I like that Ethereum, but that Ethereum 2000 trade to me is just like blindly buying Bitcoin in the low 70s, except Ethereum's already there. I number one. Number two, I agree that Sol loses the 120, Ethereum loses the 2000. Bitcoin's losing 70 and going into the 50s, most likely, Louis, right?
Yeah, I'm not gonna, again, that's 4 steps away. And so all I know is that if Bitcoin's below 70, if Ethereum is below 2000, if Solana's below 120, I don't want anything to do with these things, but that's still a long, long way away, right? These are still strong levels of support, and we'll just see. We'll see if they hold.
I got a question for you, Louis. So, I always talk about, first of all, as somebody who's been trading Bitcoin since 2013, obviously I'm interested in it. Obviously there's money to be made. But would you agree that it doesn't matter and that every cryptocurrency in the world can go to zero tomorrow and it won't matter to anybody who matters?
Yeah, sure.
Yeah. Right.
Yeah.
And it's not like a knock on cryptocurrencies or the industry. It's just so tiny. It's a rounding error, right?
Yeah, and so they're talking about this is a massive crypto sell-off because $1 trillion has been wiped off in market cap, but in the grand scheme of things, we know that it's not massive. It's certainly massive from a retail standpoint, right? But in the grand scheme of things, in terms of money management, asset management, we all know that it's not significant.
Okay, and then before we bring in Ryan Detrick, I did want to ask you about the potential for MicroStrategy to blow up.
It's certainly an interesting theory, and even just over the last week, I've just been beginning to dive into their financials and actually having a look at the terms and conditions of all of these, different debt instruments, and trying to understand what the picture is here. I don't really have a full understanding of what this picture is right now, but it's a really interesting theory that this next bear market could begin or could be accelerated by MicroStrategy just blowing up. To me, that makes sense anecdotally, symbolically. I just need to actually dive into all the way that they've actually raised this capital and the way that they're buying this Bitcoin to actually see whether that's true or not. So
Yeah,
I'm going to do that.
I think all that stuff is all that stuff's above
what
my
I
pay
find.
grade. Definitely. I think it would be awesome if it blew up completely and the shareholders get completely liquidated and Bitcoin gets destroyed. We've said that for a while, that if that happens, you buy Bitcoin and I will be right there buying it. So, I don't have a horse in the race. I don't know Michael Saylor personally. I couldn't care less about his shareholders. This is purely from a selfish perspective, like me, my family, nobody else. I think it would be great if MicroStrategies blew up, Bitcoin crashed. I'll be there buying.
I'm going to be really disappointed if they do blow up just because he's so entertaining.
I think the entertainment will continue, whether he blows up or not, to be perfectly honest.
That's a fair point.
I think there'll probably be like a 2.0 MicroStrategy, strategy, 2.0 or whatever. I don't think he's going away, even if he blows up. I think he'll still be a character.
Mhm.
Hopefully he doesn't go to prison. That would be a bummer, but
Not our
him
problem.
blowing up and staying out of prison, I think is a win. I think that's the win.
Interesting theory.
I just
answer the question in the chat quick. One whole yes. It's very strange. The convertible notes that they're using to buy more Bitcoin, they're almost structured and written like call options. I find it hard to believe that will be the case. Debt holders tend to be like roaches; they protect themselves. But these things are written as if there could be no collateral call for now. I just don't think that's the reality of the situation. But we have to see to find out.
So you don't think it blows up?
They're saying they can't convert on these things until 2030. If that's the case, it's crazy. I've never seen anything like it for zero interest, by the way. It doesn't make sense. So we got to look into it more. Here's what's going to happen. People a lot smarter than me who understand these debt instruments are going to look into it more and more because they need to now. So I think we'll hear more about this in the future.
No, you're probably right. You got these forensic people coming out with stuff. You're probably right, Strazza.
Let them do it. These are very strange convertible notes. So I'm not going to come on here and act like I know exactly how they're going to work.
It's a good call. You're right. All right. Louis, appreciate you being here, my man. We hopefully will have a lot to talk about on Monday. Can we get Louis here on Monday? Chances are we're going to have some things to discuss. Right?
Yeah, think so?
Sure I'll see you on Monday.
I think no matter what happens over the weekend, I think we'll have stuff to talk about in crypto on Monday. I do.
All right, Crypto Monday. I'm looking forward to it.
Monday. Have a great week.
I dropped the link in the chat to see some of Louis' recent stuff. And
Louis having a great hair day, Louis.
And you know what? Ryan Detrick's the perfect guy for today. He's going to come on here and cheer everybody up, right? I'm probably scaring people this morning. He's going to come cheer everybody up. So
you think so? You think he's going to be buy? Is he buyer down here, Mr. Detrick?
He's a happy guy. He's usually feeling bullish.
Yeah, I'm a happy guy. You're a happy guy, right? I mean, what is us being happy have anything to do
not
with
the same. No. Ryan's got a more sympathetic tone to him.
No, he does. I think he actually cares about other people. I
That's
definitely
the
don't.
difference.
Oh,
He
there it is.
cares.
There it is.
I
That's
think he
that's it.
legitimately cares. I definitely don't.
All right, let's bring him in here.
Jay, we've been friends for a long time. Make the call.
I mean, this is pretty professional, guys.
Nice show you got going here.
Oh, Mr. Ryan Detrick. How are you, sir?
Well, I love that intro about caring about people. That made my day. So, a little story time. I'm doing good. My wife
Story
went to
time.
Columbus, Ohio last night. I live in Cincinnati to see Justin Timberlake. Apparently, he still does something. I had no idea. I thought he was drink and drive. But nonetheless, he had a tour last night.
I always thought you were a heterosexual male. No?
I mean, whatever. If someone's making money singing, go for it. But what I'm getting at, he didn't even sing. 7:20. The show starts at 7:30. He says, I got a cold. I'm not going to be there. So they canceled the show. So long story short, I got up this morning. I was on CNBC a little bit ago. I got both my boys. My daughter's on her own. She's 17, whatever. I got both my boys up, dressed, on the bus, out the door. I did my CNBC hit. Didn't screw that up. Now I'm on with you guys. So I don't know. What would Charlie Sheen say? Winning, I guess, today so far. So I'm good. My wife's on the way home. Thank God. This is not easy. I don't like being a single parent, but I'll make it.
Lot of winning. You know, it's funny you said that about Justin Timberlake. My wife and her friends took a limo. I think they were seeing it like in maybe Newark. I don't know, somewhere in Jersey. And he did the same shit. And he pulled this. I'm sick.
Yeah.
I think he's lying. I think there's some problems.
I don't know. I mean, at 7:20 they announced it. Show starts at 7:30. I'm like,
yeah, they announced they canceled hers like maybe half an hour before. Yeah, same thing.
Anyway, that's all right. But yeah, no, guys, I'm excited to be back. Happy 2025. And I don't know. If we have anything to talk about, I don't know. Maybe we can find something to talk about. But this is fun to be back. And JC, by the way, a year ago right now, we all hung out in New York for you and Josh's birthday and in that basement at that really cool bar. I guess you didn't do that this year. I just didn't get an invite. Which was it?
No, here's how it works. This is how it works. So Josh and I have known each other for a long time pals. And Josh's birthday is like a week after mine. This is Josh Brown. And then, for me, I don't need to make a big deal about my birthday. Like, I'm good with like a ribeye, like I'm easy, right? But Josh likes to celebrate his birthday, but he doesn't want other people to know that he likes to party on his birthday. So he makes it like, oh, it's JC and Josh's birthday, right? So like he throws birthday parties for himself and then brings me in as like part of it to like kind of like dilute the selfishness, He's been doing this for a long, like decades now. And you know what? It's cool because Josh has some friends that I don't know and that I get to meet at our birthday party, So I'm for it. Love you, Josh. Happy birthday.
That one last year was amazing. The people you walk around, it's just a who's who of people hanging out, and I thought it was great. So if you do another one, shoot me a note. I'll fly to New York. But happy belated birthday,
Josh. I'll be like, yo, no birthday party this year. The folks are wondering.
What happened? The people want to know. So yeah, exactly.
Mr. Detrick, my friend, we are a few years into a bull market. Some pretty epic returns. We're seeing some rotation into Asian equities. We're seeing Europe absolutely ripping. Seeing some strength out of Latin America, emerging market currencies. On the surface, things look very attractive. You're looking at market sentiment. People are scared. People are angry. They are not happy with the situation. Here we are. Today is the last day of February. We are now entering the third month of Q1. Why don't you share with us how you feel about the current state of the markets?
Yeah, so a lot there, a lot to unpack. I mean, I know I was coming on with you probably 2 years ago saying we thought the bear market was over. We didn't see a recession. I know Sonu Varghese come on with you before. He looks at the macro stuff. I'm kind of more technicals and sentiment and trends. And we just saw reasons to think that there was not the end of the world. I know you guys were in that camp too. Unfortunately, we've rallied. Now, what's really fascinating about like right now, I guess we'll say, the first quarter of a post-election year, if you look at all 16 quarters of a 4-year presidential cycle, pretty sure I sent this chart to you guys, is the second worst. So after a 20% gain, you tend to get choppiness in the first quarter. We were talking about this for a while, and I know people on Twitter get mad or X get mad when I pointed this out. Like 2 weeks ago, I'm talking about be open. I call it a banana peel. Be open to a banana peel in the second half of February. yes, the calendar is weak, the second half of February. You know, Mr. Hershon. I mean, sometimes it is what it is. We talked about that. We manage real money, right? We've got over $42 billion total at Carson Group with our advisors all over the country. What we were saying, what we did in the money we run, we added some treasuries late last year. We added some tips, maybe 3 weeks ago. We're still overweight equities. We still think it's a bull market, but we said, listen, maybe we're wrong, right? Maybe, but we think yields are going to go lower, dollar going to go lower. And those are some areas to kind of diversify your diversifiers, is what we like to say. And it makes sense from a portfolio point of view to do that. But structurally, I still think this is a bull market. I still see positives. One more thing. The last 5 days, S&P is down 4%, give or take. We all know that. The last 5 days, as of futures right now, financials are actually up. The last 5 days, high yield bonds are actually up. Yesterday's big bloodbath, high yield was virtually flat. So the way I learned it was during big sell-offs, if high yield is weak, then there's a monster under the bed. This reminds me, right? We all say this. History doesn't repeat itself, but it often rhymes. Mark Twain, early August, the yen carry trade unwind. Everybody freaked out. You were on the compound of friends with Fami, I believe it was Fami. You guys brought a lot of calm in the middle of that storm. What we saw then, though, we saw the dollar actually go down. We saw high yield hang in there. Yeah, the market was down like 8% in 3 days. Pretty darn scary. Don't get me wrong. But under the surface, there were still positive. So to me, this is just your standard 5% blip on the S&P. Maybe it's going to be a little more when all's said and done. But credit's hanging in there. Financials are hanging in there. A pretty important group. There's some reasons to think this is just normal choppiness. And we're still pretty optimistic, I guess is what I want to say.
No, I think you're making a pretty unbelievable point here in terms of financials.
First time I've ever done that. Thank you. Yeah.
Financials positive for the week.
Right.
Regional banks flat for the week.
There you go.
You know, not things you see when the world's collapsing.
Right.
Now, let me ask you, let's go back to this high yield situation. You're talking about the absolute strength in high yield bonds. I tend to look at high yield bonds relative to U.S. Treasury bonds as a more important indicator relative to nominal yielding Treasury bonds, versus the high yield. You are seeing some deterioration. Nothing like crazy, but you are seeing it.
No, you're exactly right. And honestly,
still within the range.
No, you're right. If you do a relative in 23 and 24 with the fixed income part of our portfolio, let's say 60-40, we've been like 30% bonds for going on 2.5 years now. We just thought stocks would do better, but we have to have some fixed income in the portfolios we run. We had some high yield because we thought yields would stay higher. I mean, Sonu was one of the few people a year ago when everyone told us 6 or 7 cuts last year. Remember that? We said, no, the economy is going to be stronger than you think. We've got strong productivity. There's maybe going to be 2 or 3 cuts. So we were, again, dipping in a little more high yield. We didn't own any treasuries. And the money, we run real money, right? We didn't own any treasuries for the first 2 years I worked at Carson. But we've added some because, again, we think yields are going to go lower. And I know we just got some, I know I'm going to use some dirty words on this show, but some inflation data that just came out. It's fine. I mean, why is inflation sticky? Because of shelter and because auto insurance. People pay that. It matters, yes, but there's improvements when we look under the surface. So those are some reasons we think yields go lower. And the big thing is, are yields lower because of a growth scare, or are yields going lower because maybe there's better inflation coming, maybe a combo? I mean, is it Doge? What we know is this. We've made a bet, if you will, on lower yields this year, JC, and also the dollar probably making a major peak. I know you kind of talked some about that, and that's kind of the camp we're in, and that's where we're positioning our models, getting out of some high yield, getting more into treasuries on that fixed income side of things. But on the equity side of things, we still like financials, industrials, and I know we're more even weight small. We get a little bit of an overweight mid. Trust me. That's frustrating. But from a diversified portfolio point of view, we've been more even weight tech the whole time, thinking that's a pretty pricey area. So we own a lot of tech. But we think that still, when all is said and done in a year from now, we think these other areas are going to do pretty well. And tech probably is still just market neutral, I guess, at the end of the day.
Yeah, I mean, tech's just really been a massive underperformer for quite some time. Tech on a relative basis peaking last summer.
Well, fun trivia stat. I don't think most people know this, but last year, tech underperformed the S&P 500. Now, it was only by like 10 basis points, 0.1%. But I'm just still saying that surprises people when they hear that. We all know 23 was amazing, but that's what you're getting at. Techs are underperforming for a good deal there the second half of last year and actually did worse, quote unquote, than the S&P last year.
On a relative basis, technology looking to close today. Looking to close the month relative to the S&P lowest level since April of 23.
Wow. I believe April of 23. Well, I guess it was May of 23. May of 23 was the very first really solid NVIDIA earnings, right? When they beat by the largest amount of all time. And that really kicked off the AI boom. So it's interesting. That's what we're back to on a relative basis right before the AI craze really kicked off.
Talk to me about consumer discretionary. So,
Yeah.
consumer discretionary last summer left for dead. You know,
Yeah.
everybody just like, oh my God, the consumer is dead, can't afford anything, blah, blah, blah. You got one of the biggest face rippers in the history of the
Mhm.
stock market. I mean, literally, consumer discretionary just ripping in everybody's face, Amazon, Tesla, the whole
Mhm.
thing. And now we've corrected a lot of
Yep.
that, and now we're sort of back to those November levels there. You know, technology, consumer discretionary, of course, financials and industrials. But sticking on the technology and discretionary high beta,
Mhm.
you know, if you lose tech, you lose consumer discretionary, high beta struggling. You know, can financials hold up this market, or
Mhm.
does that just further reiterate that the strength is international, not in the United States?
Yeah, I think it can hold it up. I mean, we've seen some of that so far this year, to be honest. I mean, now listen, if tech really falls apart and consumer discretionary really falls apart, yeah, I get it. That's going to be awfully tough. What's unique about it though is getting a little more macro. Like we just got a bunch of data from the Z.1, the Fed, all this stuff. I'll keep this real simple. We know about all the debt. I know your listeners might. Hopefully, this is interesting. Record debt. We get it. But everybody, no one talks about the denominator, right? Denominator blindness. There's more equity. Last year, disposable income was up 5%. Overall debt in our country for households went to 18 trillion. Okay. That was up 3%. So disposable income's growing faster than debt. Everyone talks about all this debt. They forget about the denominator. We're just going to keep that kind of high level there, JC. What's that tell us? Well, we've been saying for a while the consumer is still strong, right? So this consumer discretionary. I know a lot of that's housing being weak and what's going on there. Well, gee whiz, you tried to buy a house lately and try to look at mortgages. I mean, that's what the issue is there. And that's one of our worries. Even coming into this year, we list worries. Two of them were we wrote this like in November, tariffs and housing because of higher interest rates. So you have to have, a SWOT analysis. Now we still think the strengths and opportunities outweigh the negatives out there, but those are some things that do have our attention. But the underlying pinnings of the consumer, in our opinion, is still really strong. So we're more neutral consumer discretionary because it is kind of pulled around by just a couple big stocks. But just from a consumer point of view, if you don't think there's a recession coming, which we don't, if the consumer is still pretty healthy, which we think they are, when you actually look at the real data, balance sheets are the strongest they've been in 25 years. If you just look at assets minus liabilities, then divide that by disposable income. So it's more apples to apples. Kind of a mouthful, I know. Just trust me. We followed this for 2 years now. Sony's been all over it saying the consumer's in a lot better shape than the TV tells you. And that's why this is still a bull market. That's why there's not going to be a recession this year. And that's why we're still optimistic that equities will outperform, fixed income when all is said and done.
Let's talk about the rotation.
Sure.
For a long time, and a lot of the kids these days have never seen the United States underperforming the rest of the world. You and I got a couple more gray hairs, a few more cycles under our belt. If anything, at least I can only speak for myself. I'm actually a little bit surprised just how long the United States has been outperforming, if anything.
Right.
So any rotation internationally, it's almost like, well, it's about time.
Mm-hmm.
Do you think that this is actually it? A guy like yourself who's been working with financial advisors, I don't know, for like forever. And a lot of financial advisors have tried to dip their toe into international.
Been burned.
And every single time it's a mistake. Every time it's a mistake, international is over, US. Do you think this is it?
Mm-hmm. I think to quote your earlier conversation, that like behind the shed, right? I guess when you dip your toe into a financial, or I'm sorry, into international there. Put it this way, we're still overweight the U.S. relative to the rest of the world. We still think there's more growth coming here. Now there's a little bit pricier, but we do have international exposure. We're more neutral international. Now, I'll tell you, the one thing that gets me, we've been kicking this around, we came into this year underweight emerging markets. I get it. Emerging markets have done very well. We have seen these blips before, but it does come down to the U.S. dollar. Like the year 2017, maybe some, maybe newbies remember 2017. We had a dollar. Everyone told us it was going to go up, right? President Trump won the first time. Everyone said dollar only had one way to go. That's up. Does that sound familiar? Yeah, we heard that, for the last 2 months ago consistently. Then the dollar went lower in 2017 by a decent amount. global markets did amazing, right? They did really, really well. In a lot of cases, U.S. had a great year in 2017, but in a lot of cases, international actually did a little bit better. So we can have another one of those, maybe one-off years potentially, where the rest of the globe catches up. But when we look at things 3, 4, 5 years from now, we still think the U.S. is probably still. Maybe I've got home country bias because we manage money and we know a lot of our clients prefer. Trust me, if we said go 90% in China, we're not going to do that. We'll be very clear compliance. We're not going to do that. But if people
when you talk about, hold on, when you talk about how your clients prefer to be in America, I mean, first of all, it's none of their business where they prefer to be. They come to financial advisors for the financial advisors to tell them where they be. But the fact that they prefer to be in the United States, I mean, if this was 15 years ago or 18 years ago, would they be saying that? No.
No, probably not. I guess when I say prefer, I mean, believe me, we have international exposure. We have, developed international, a little bit of EM.
But
so
from a sentiment perspective, the fact that they prefer to be in America when
you always wonder, where it's always obvious looking back, like, oh, of course, when President Trump came out with a meme coin and Melania came out with a meme coin and, sailors on the cover of, was it Forbes? I think, of course, that was a peak. It's obvious looking back. And maybe
I'm mostly surprised that Forbes still exists mostly.
I get quoted in there a lot. I'm a fan of it. I think it's a good magazine, but
love
anyway,
Forbes, love them.
Yeah. But we see these, and it's obvious looking back. But I'll tell you, eat back to kind of maybe 2 questions ago. Emerging markets, it's quite appealing. There's obviously some potential. People hate it. I mean, I just know when I get to work with clients, people are very worried right now, right? The AAII, and I get it. The same people they ask every week, as everyone's talked about, above 60, only 6 other times in history. Really bullish a year out. I looked when you're over 55. You got a 55% bears, okay? And which we just obviously were. I have like 20 something times. But JC, here's what's fascinating. On average, the S&P on all those times you're 55% bears is 27% away from all-time highs on average when you're that high. We're 3.5%, 4% right now. So I know we talk about this stuff, but then it's just as easy to say, well, look at the options. Options aren't very worried. Look at investment managers, NAAIM. They're fairly optimistic. I get it. There's all these different parts to it, but someone who works with clients a lot, they're worried, right? They're seeing the stuff on TV. They're seeing all the bad stuff that's out there where they're not telling you.
Let me ask you this.
What
is it that when you say all the bad stuff that's out there, what out of curiosity is so bad?
Well, thank you for pointing that out. I don't think too much is bad. What they're hearing, right? Tariffs, Washington, drama, losing jobs, tariffs are inflationary. I mean, what's fascinating about that inflation stuff, a week ago today, Michigan consumer confidence came out. We had the huge jump, like over 1% month over month jump expected in inflation, like the fourth most I've ever had. The consumer confidence came out this week. They had different survey, but still consumers, big jump. But then you look at small businesses. Small businesses have such a better track record about what inflation is going to do. The Atlanta Fed, they do one of those, virtually flat for the month. So you got businesses saying there's no worry about inflation coming. Consumers are running around freaking out, fire, running around. I would side 9 times out of 10, maybe 10 out of 10, with small businesses who have more of a foot in the game versus purely politics. But this is what we've been pushing on a lot. Don't invest in politics. We all know, you can have bull markets, bear markets under red or blue. We'll just leave it there. But when we have strong productivity like we do, record earnings like we do, like you pointed out, a broadening bull market all around the globe. Yeah, the U.S. has taken a little bit of a pause here, but first quarter post-election year, that's normal. We've been talking about this for 2-3 months now, saying expect a little bit of a pause in the first quarter, but we still think things are going to do good. And what's going to drive it, in our opinion, is once we get a little better inflation data, maybe we get a couple more Fed cuts, and then people realize the economy is actually pretty solid and we can get through this, and that's going to lead to still, we think 12 to 15% S&P target. I get it. I don't like using targets either, but we still think we're in a bull structure here, and that's why we're positioned that way.
Do you need tech to come back and be a leader for this bull market to continue and we get that 15% return in 2025? Do you need that to happen for that return, or is the tech situation just a relative performance story where if you don't get the tech, then the international outperformance is here to stay?
Yeah, I don't think you need tech to outperform. I mean, literally last year they did underperform. The last 6 months, like you pointed out last year, stocks did pretty well last I checked, and we didn't have that big tech leadership. So I don't think so. I think the key, of course, is rotation, the lifeblood of a bull market, as we all know. One thing that gets me, and I'm sure you follow this better, closer than I do. Last month or so, we've seen utilities do a little better, staples do a little better, healthcare, but that's got some offensive and defensive attributes to it. So you're seeing some of the defensive things. I'll never forget, and I pointed this out the other day. Scott Brown and you in the fourth quarter of 21 were all over the fact that the wrong things were, I shouldn't say the wrong things, but the defensive things were leading, telling us maybe there's something going on in the fourth quarter of 21 when everybody got money from the government, they're day trading, making tons of money, everybody's happy, right?
Not to mention most stocks had already been rolling over for
most
of
stocks
that
are rolled over. The defensive ones were leading. Now we're not quite. I don't think we're there yet. Maybe your opinion. I'd love to know, but we're seeing some defensive things do a little bit better. So that's caught my attention.
What?
What's that?
Like what?
Well, just on a relative basis, they've stopped going down, right? Utilities, relative base, stopped going down. Staples stopped going
Utilities,
down.
I wouldn't argue they're defensive. Utilities.
Well, you're right. They're AI now, right?
Utilities were a leader in that bull market from 03 to 07. Utilities
true.
led the whole way.
Yeah, I mean, I guess
Staples are the ones I'm
let's
looking
put it
at.
low vol, maybe low vol. Then I mean, we actually, you know what we did? We did a trade about a month ago. We had a little low vol on one side, a little high vol or high beta on the other. I get it. High beta's getting smashed the last 5 days, but with like that kind of goalpost approach, having a little hedge on each side. But I'm with you. That's what I'm saying. Like they're not wildly outperforming, but they're not underperforming by massive amounts. But I think it's normal. I think eventually those defensive things will underperform the more high cyclical, stronger utilities, not utilities, wrong one. Financials, industrials will probably take the baton back. But what do you think of industrials here? I know we're big fans of Renmac, and they pointed out some structural, technical difficulties, I guess, with industrials. What are you guys thinking there?
I mean, I'm seeing the German DAX making new all-time highs every day.
Yeah, there you go. Okay.
I mean, right? You're seeing France absolutely ripping. These are countries that are driven by industrials. No?
Yep. Yeah, well, trust me, we're overweight industrial, so that's kind of what I wanted to hear, to be honest. But yeah, okay.
I would look at Canada, look at the TSX. Been rolling over a little bit. A lot of industrials there also.
Yeah.
Again, I don't know if it's like a Europe thing that's driving industrials there higher, or if it's or if it's U.S. tech driving U.S. industrials lower. Maybe I'm overthinking the situation, but like, what do I think about industrials? I don't think like if you're looking for a problem, I don't think industrials are the problem. I think if you're looking for a problem, you're probably looking at something like technology.
Yeah.
Let me ask you this, Ryan. So, Strazza this morning was telling me about the Mag 7, how we lost the Mag 7. Oh my God. Does that actually matter? Is the Mag 7 something that actually means anything to you? How do you think about it?
I guess I'd say it means something to me because I know the clients I work with, a lot of them made a lot of money on it. So why are we getting such worried sentiment polls? Why are most investors worried? Because they probably, to be honest, got a little top heavy in those areas. And working with clients, trying to explain to them, this is why you diversify.
They don't own China. They don't own Europe. They own the big ass tech stocks. So that's probably why sentiment is so bearish, right?
Exactly. Or if, like you said, financials are up on the week. If you had a bunch of banks, you're feeling pretty fine right now,
great.
I mean, obviously I call it Deep Seek Monday, whenever that was 3-4 weeks ago, when Nvidia's down 20% and everything else got lit up, and some of those utilities that did amazing were down 25. They're like 7 sigma events. It's not supposed to happen in a billion years, but it happened with some of those utilities on Deep Seek Monday. But anyway, so yeah, I think that's some of it, but that's what we're trying to stress is, listen, we have tech exposure in the money we run, right? We're even weight. If AI continues to do great, like Dan Ives says, and different people, hey, we'll be fine. But we just think, again, I mean, I know I was going on TV late last year saying, yeah, we're even weight tech. If you told someone that, third quarter last year, looked at you like you were crazy, because of course you have to be overweight tech. It's the only thing that goes up. That was never true. We know that, but it's what they told us. So that's kind of what it is. And also, I'll tell you what is interesting on Mag 7. Everyone knows this, but let's reiterate it. 6 of those names on earnings sold off. Meta went up like 20 days in a row. So congrats there. That was amazing. But the other 6 had earnings that were quote unquote good, but they sold off. I mean, I'm a message of the markets guy. I got the book right over there. John Murphy, right? I don't care what the market says it's supposed to do. What does it do on the news? Well, we saw weak reactions from 6 out of those 7 Mag 7 names. And that's not the end of the world. But again, that tells you they probably lost that, but maybe they dropped it. How about this? They dropped that baton, and I think some other groups are picking it up, which is perfectly fine, especially when you're more neutral tech. I mean, I don't know if we'd ever go wildly underweight tech, because there is kind of career risk and different things when you manage money. But to say you're even weight tech, sometimes you get weird looks, and there's other areas that we still like more here.
I got a couple of charts here on tech. If you want to throw up a slide, I got 3 charts. Throw up slide 2 there, please. Do you think, Mr. Ryan Detrick, that it is just a coincidence that technology relative to the S&P 500 began its underperformance as soon as it finally got to those March 2000 highs. Do you think this is just a coincidence?
No, where's our friend Michael Batnick right now? I don't know if his head just exploded, but no, I don't.
Shout out Michael Batnick.
Well, believe me,
Batnick.
He's awesome. He's awesome. I know sometimes he just likes to give you a hard time, but no, I don't. I mean, I think that's not a coincidence. As someone who's done this a while, like yourself, when we had, I forget the exact numbers, but whatever the 82 low was in the S&P 500, whatever the 2007 peak was, you do 61.8% of that. It's like 666 or like 668 point something, whatever. It's 666. That's where the S&P bottomed, okay, as most people know. But from the 82 lows to 2007 peak, when I saw that back on that day, and literally that day, I was talking to Bloomberg about it. They were talking about this Fibonacci retracement. I didn't quite know what the heck was going on. We all were panicking back then, believe me. But when I saw that, I was like, wow, maybe this stuff kind of works. Not every time. Trust me, not every time. But when I saw that, I was like, that's not a coincidence, right? And then you see what you just shared. I don't think that's a coincidence. I will point out one thing. Can you guys show the Monday, Friday?
Oh, one more. Go,
okay, one more
there.
for you that I'd love to talk about Monday, Friday, and then I can take off.
Right, zoom in there, guys, on the next chart there. So that's a zoomed in look at what we just looked at. As soon as it got to those highs, that's when the underperformance started. One more, and then we'll get to the Monday, Friday.
Okay.
New multi-year lows there for tech relative to the Q. So losing tech on a relative basis, slowly but surely. Go ahead, guys. Go ahead. Monday, Friday. Talk to me.
Yeah, well, I mean, I think most of the other charts I've discussed, but what's fascinating about this year is Mondays have been really weak. There it is. Perfect. And Fridays have been really weak. Now, why? Everyone wants to know why. Well, because it's news heavy. This is the news trumps charts. I know we all like our charts, but sometimes the news trumps charts. And we've had a news heavy cycle. So to me, it's fascinating that you've got the big drops on Mondays because of tariffs and deep sea stuff. And then nobody wants to hold on the weekend because they get worried about what's going to happen over the weekend. So you sell Friday. Last year when stocks gained 25%, Friday was up huge on the year. The year before, Friday's up huge. My opinion is if you're in a solid bull market, you tend to have buyers ahead of the weekend. Monday's usually weak no matter what. Nobody likes Monday. Throw it out the window, whatever. But Friday's that one day that matters to me. So when I see something like that, it's not the end of the world, but I think once we start to see some buying on Fridays, everybody, that's maybe when we're kind of through this choppy early first quarter, February, March kind of time frame where you chop around. But to me, that's pretty darn interesting how weak Mondays and Fridays have been this year relative to about any other year in history, to be honest. It's early, I get it, but just kind of interesting.
No, it is. And someone like yourself that looks at this sort of thing, I mean, it stands out.
Yeah, right. Mm-hmm. I talked about it last Thursday on CNBC. Oh, Friday's a week. The next day was literally the worst day of the year. Now, I don't know, maybe it's random, maybe it's not. But, the second half of February, I threw that chart into, and I know everybody's probably seen these. I share them all over the place. But second half of February is usually weak. And again, it just is what it is. Don't be, what we're trying to say is don't panic. Right? Sona and I talk to our advisors all the time. We're like, get ready for the banana peel. Get ready for some weakness in late February. And here it is. And everybody's freaking out. Everybody's panicking. No, look at credit. Look at financials. There are some things that if the true monsters under the bed, as I started this conversation, they'd be falling apart, in my opinion, and they haven't been. So, and I know, like you said, Treasuries have outperformed junk, but high yield, but still high yield's hanging in there. That to me is a sign that this is not it's not the peak. The bull market's not over. One more thing. You asked me about bull markets way in the beginning. This bull market's 28 months old. Okay, what in the world does that mean? We just made new highs on February 19th, which, by the way, February 19th is when we peaked in 2020. Let's hope history doesn't repeat itself there if you're a bull. But anyway, 28 months.
I hope it does. I mean, we made a lot of money.
Well, I know you. I knew you'd say that, but I'm with you.
Shit.
I'm with you.
Crash them, baby. Let's go.
Yeah, I got you. But anyway, real quickly, just for big picture stuff. Bull markets that make it into their third year, like this one has. Okay, I looked at 5 going back 50 years. Okay, the 5 of them. The average is 8 years. The shortest any bull market made was 5 years. This one is just over 2. So just be aware. History would say this can go a lot longer. Things can change. I get it all, but that's something we're really preaching.
How are you defining that out of curiosity?
Yeah, the same as everybody else. Down 20%, then up 20% off the lows. 20% off the peak and 20% off the lows. You got to find the definition somewhere.
So when you enter year 3 of a bull market, on average, you don't get the first 20% plus correction until year 8.
Yeah, well, exactly. That's the way to put it. Yes, I mean that is the best way. That's the best way to put it. Yeah, and I know it sounds fascinating, and trust me, it is. And now, we can play with numbers. 2011, those of us that were around back then had like a 19.8%. It didn't classify. It felt like a bear if you were around then. December of 2018, my goodness gracious, that felt like a bear if you were around another 19%er. So it's close, and I get it, but I still, those are structural bull markets, right? Just little short blips in the whole thing. And I think that's kind of where we are now. Third year of a bull, something for everybody. Third year of a bull can be choppy, a little frustrating. That's okay. After gaining 70% in 2 years, maybe that's kind of what we've been saying the first half of this year could be, but still think it'll pop higher before all said and done. So just be aware these last longer than you think. Yeah.
You know, one thing I've learned over the years is that you and I get called permabull a lot during bull markets, right?
Yeah,
like that's like a characteristic of bull market. Stocks go up. JC and Ryan Detrick get called a permabull. Like that's what it is. So listen here, permabull. What is it going to take? What would the market have to do to invalidate your optimism into the year and this 8-year bull market? Like, are there like one or two things that you think like are at the top of the list that are like, if that happens, we're going to really need to question this thesis?
Yeah, no, I'll get there in a second. With the money we run, we added gold back in March of 23. We added more gold after the U.S. election when gold sold off and the dollar soared. We've added treasuries a couple times. So to say, permabull, I don't know. We've got some other things in there. But yes, overweight equities. But to get to your question.
I'm not calling you that, but I know you.
I know what you're. I know you're not.
I know.
And that's still a backhanded compliment, or not even a compliment. It's backhanded. Oh, permabull. Like, okay. Well, once they start agreeing with you, then maybe that's the answer. Maybe whenever it starts really.
For the record, I get called a perma bear during bear markets.
Exactly. So, isn't that the greatest honor? Exactly. I mean, I guess at the end of the day, the couple things I like to look at are credit spreads, right? If credit spreads start to blow out, which they're not, triple Bs and all those different spreads we can look at, they're still pretty calm. That'll show us if there's.
Isn't that more coincidence, Ryan, than leading?
Maybe potentially, but I mean, how coincident will it be when you start to see the spreads? Will the stock market be down? If we get spreads the highest they've been in 3 years, for instance, will we be in a bear market right away? I don't think so, right? I don't think so. I mean, 2007.
You don't think that if we get 3-year highs in credit spreads, that like the stock market's already getting destroyed at that point?
It might be I don't know if destroyed's the right way to put it, but it could be in a lot more trouble going forward, right? I mean, maybe we're down 10, 15, but we're going to be down for a while and we're not going to bounce back like we have been. So those are things that we watch closely. I mean, Sonu does a lot of work with the macro backdrop, so I'll leave that to him. I mean, I like to look at, just the fact and I know this week sold off, but as of last week, 10 of 11 sectors are up on the year, and 8 of 11 are outperforming the S&P 500, right? So it's kind of that broadening out. If you're only getting a couple groups leading, that's the weakness. Advanced decline lines, which, advanced decline volume is doing fine. Advanced decline line addition by the equities is underperformed a little bit. So those are some of the things I guess we'd look at. But, hopefully as someone who manages money, we can do tilts and we can do things. We can add the treasuries. We can go to the low beta. We can go to some of the more
we can do tilts?
Yeah, well, like let's say...
Are tilts the TLT?
No, sorry. Just geeky language you use when you're managing model. We can tilt things a little bit. Like let's say 12%.
That was like a new way to explain TLTs because I kind of like
that. Yeah, like let's say 12% SMID. Like maybe most portfolios have 12% SMID, small and mid. We can tilt to 15%, or we can go down to 9. We've got kind of we manage money, so there's sometimes some kind of rules we have to follow. So we can kind of move it a little bit. We can't go way too far unless it's an unconstrained model, getting way in the weeds on this. But that's kind of what I meant when I said that. But there's different things we can do, right? When you manage money that and honestly, I may be different than maybe some of your other guests. Of course, at an RIA, I'm not going to say I want a bear market, but if we had one, we would say, what's history tell us? If you only got money for 10 years,
why don't you want a bear market?
Well, that's a great, you're really getting me on a Friday. I mean, listen, with clients, it won't be fun. People lose money. We lose revenue. I mean, it's not great for us because we can't necessarily short it.
Part of the way the market works. You have
during those periods. Now, there's ways that we can, hopefully put it this way. We do better if we recruit advisors. So in a bear market, I would sure hope our team does well. My team, investment team, is 16 people that manages money, creates content. People from other places look around and say, I want to go over there and work with them. Because you know what? We managed 16 models, JC. Last year, 14 of them outperformed their benchmarks. And all 16 were positive. The year before is like 13 out of 16. I mean, we've done really well against JP Morgan, PIMCO, all the big names.
Keep going. Who else you beat? Who else did you beat? Call them out. Who else you beat?
Well, no, I'll be quiet, bro. They're pretty good partners. But nonetheless, we've done a good job. And that's kind of, if we do go into a bear and things start to change, we can do some things that, we'll probably still be down because we can't just short everything, but we can be down relative. We can still do better. There's ways we can help our clients. At the end of the day, just create content and continue to be there as well, are things that we strive to do. Yeah.
Ryan, I love you more than anything in the world. When are you coming to New York?
I don't know. I guess when you have a birthday party, let me know.
Dude,
Yeah,
my
nothing's
birthday just
planned.
passed. Josh decided not to have a birthday
Okay.
birthday party this
Well,
year.
Yeah, I got you. Well,
Come
when I
through,
do, I'll
man.
let you know. Hopefully
Ryan,
this summer.
Ryan, we're going
Yeah,
to New
Ryan's coming to
Orleans
New
in a
Orleans.
couple
Ryan, you're
months.
coming to New Orleans May 13th.
I gotta
to 15th.
look into it. I'll see. Yeah, I saw that. I saw it might work.
Dude, you
yeah.
missed Chicago. Chicago is awesome,
Oof,
bro.
I know that sounded. Sonia had a good time. No, that sounded amazing. So no, New Orleans. I
Soda
love
did
New
have a
Orleans.
good time.
I think you and I both were thinking. I made a joke like New Orleans. You're like, that's what I was thinking. So we're always seeing eye to eye on a lot of this stuff. So yeah.
Crawfish, gumbo, jambalaya. Woo,
Gout,
let's go.
Gout. I mean, just it's gonna be wonderful. It's gonna be wonderful. Yeah.
Yes, exactly.
All right, Ryan Detrick, everyone.
Appreciate
Ryan,
it,
thanks
guys.
a
Have a
lot.
good
Good man,
morning.
Ryan.
Thank you.
Appreciate you.
Take care.
He just spent like 47 minutes. He got backstage at like 9:03, and so yeah, basically like
Dude,
45
Ryan
minutes.
Detrick, legend. All right, let's get out of here
Oh.
early, guys. Let's do a little recess and hop. What do you say?
Whoa! Just because you
I
want to
have
leave
to leave.
early,
Bye.
hold the phone. Hold
I
the
know.
phone, man.
It's crazy.
I gotta go. I got
If you
work
want to
to do.
leave, okay, then tell us your recess. I kind of want to do some live charting with Steve.
You guys can do your live charting. I just want to say how nice it was to have, a nice dinner. Strazza, you were missed. You were missed again. Twice now. You weren't in New York. We missed you then. I'd love to say, you weren't missed and fuck you, but you were missed in New York and you were missed yesterday as well. I just want to let you know.
Thanks. I had the FOMO.
Yeah. All right. Adios.
And just like that, he's gone. That's okay because there's more things. There's things going on. So we got Alfonso here. Steve, you want to bring up your charts? You want to do some for a couple minutes here? We can do some.
I
live
gotta
charting.
tell you, Spencer. I gotta tell you, I was not
Yes?
hitting them straight yesterday.
Could that be because you were distracted?
Maybe.
By the bear market we're in,
And the afternoon sell-off.
Yeah.
Sean's funny. We have this correction signal that never fails, and it's when Sean goes on vacation. So he was pinging me. I mean, it's like every time Sean goes away, something's going on in the market, some sort of volatility event.
it seems to actually be true.
It's really funny. So strikes again. One of the things, Spencer, I've been kind of ranting on since last week is the sentiment shift in crypto, right? And let's just keep doing it because they're just like glaringly obvious sentiment signals that we're getting from crypto right now. Have you heard of the latest meme coins? Have you heard of it?
I did see. I saw a headline. I don't know how much more there is to know besides the headline, which is that meme coins are free from SEC rain.
That's
right?
based.
That's all. That's all you need to
meme
know.
coins. It's been determined by the powers that be with the U.S. government and the agencies that meme coins are not securities; they're more like collectibles, right? So that means the SEC has no oversight, and basically you're getting headlines today like SEC unleashes meme coins. SEC says meme coins not subject to securities regulations. SEC declares meme coins are not subject to oversight. All of this is so good, right? Meme coins being treated more like beanie babies than Apple stock. However, I pulled up my scan today. I said, what have meme coins been doing, right? Because some people, the market's pretty good at sniffing this stuff out. So I said, okay, what's been going on with meme coins? You want me to read you how many meme coins are down 70% just from their highs a few months ago?
You can tell me. Here, let's look at my spot.dog, and here, let's look at my spot.dog, and I have 1, 2, 3, 4, 5. I have 8 positions. Actually, for the record, none of them are down 70%. Oh, that's not true. I take that back. I was looking at that wrong. Yeah. Okay. If the bogey's 70%, then 5 of them are down 70%. 5 out of my 8.
The Floki, let's check on the Floki because this one's been extra bad. So the Floki, we won't even go back from the 2024 highs. Down to 75%. Okay, could be worse. From the 2024 highs from June, down 80%. Bonk down 80%. Sheeb down 70%. It's not good out there. So again, you can file this away under a really, really awful reaction. This is a bear market reaction. You get positive news, good news, the kind of news that would have sent these things soaring last year. And instead they get absolutely slammed, hammered. In fact, we're just looking for these, this area of the market. Let's look at the Doge. We're just looking for a floor, right? This is Doge since the election. This is the election ramp.
Oh, wait. Do we have your charts up?
Yeah, they're up.
Let's
You don't
get
see
your
it?
charts up.
Sorry, I'm talking to the charts over here.
Yeah, we got it.
But look, this is Doge. You got the breakout. This was the election ramp, right? Doge ramps higher and then absolutely slammed. This is what's been going on with meme coins, despite all the positive headlines. So to me, it's another nail in the coffin for crypto. Another good headline and another terrible reaction. It's just like one after the next these days. So I wanted to touch on that. I thought that was interesting.
We talk about stocks going up on bad news or down on good news and what that signifies, and this is classic, so classic bear market reaction, what Steve just said. If this were a couple months ago, far coin to the moon today, right?
Dude, be up 30% for sure.
But
Jim Bianco had a sweet take. He said, I dropped it in the
he said half his feed is telling people to buy Bitcoin, right?
Yeah, he was talking about how the sentiment for stocks is just absolutely terrible, right? But the sentiment for Bitcoin, everybody's out here like loving it. And I thought that was interesting. It is very different, right? A lot of fanboys out here for Bitcoin. People are really souring on equities, though. The sentiment, JC brought it up, I think, last week. You do actually have some extreme readings in some of these sentiment indicators. Look, I don't weigh that much at all. Definitely not something like the extreme fear readings that you're hearing about, like the fear and greed index. But there are some like the AAII, I think it's net bull bears or whatever. That's at an extreme. So it's strange out there, the difference in sentiment between stocks and
I think it's no different from any other time in the last few years. Tech drives sentiment. So when Nvidia is down 8% and mega cap tech is doing what it's been doing for the past couple of weeks, or you can go back the last couple of months or even quarters, then that drives sentiment. When ARK goes from up 20% year to date to down in like 2 days or 1 day, then that's it's gonna make people bearish because it's the world that we live in. I don't know.
Some other quick headlines.
We had Dell, which is down on the Dell's report was not good. This is not a good time to have bad news, everybody. Dell had some pretty light guidance, so it's down 5%.
Dude, they're all getting hit. It's anything AI related. Good reports, bad reactions. Did you hear Ryan Detrick talk about 6 of the Mag 7s? Bad reactions. We talked about this. We've been talking about this for quarters now. Eventually, the music's going to stop, and these guys are going to come out, and they're going to keep reporting good numbers and raising guidance and, beating the streets estimates, and the market's going to stop liking it.
Yeah.
Is it happening?
And then eventually it's going to turn, and you're going to say, oh, but all that time, the company was getting better and better and better, and you had your chance, right? So this is the circle of life. Hey, Fonz, you want to come on? I know you're here. You can pop in if you want. You want to just bring yourself on? Yeah.
I'm gonna show you some scary charts. Consumer discretionary versus consumer staples.
What's up, guys?
Bonds. I'm gonna show them some scary charts. All right.
Yeah, that's good.
A couple charts to scare you. This is the king risk appetite ratio of them all. This is simply a ratio of consumer discretionary stocks on a cap weighted basis versus consumer staple stocks, right? So this is offense versus defense. Looks like we were getting a breakout here. This would have been big confirmation for the new highs in the stock market. This was just back in late January. Instead, it failed miserably. Now getting slammed back down to its lowest level since just before the election. If you look at now consumer discretionary stocks on an absolute basis, we tend to see the relative trend lead the absolute trend, right? We see this all the time. So I think XLY now is going to print a failed breakout as well, fall back into the box, and that would be some really significant damage. Right? That would be a big loss for bull, don't you think? And then one more, while we're on risk appetite, I mean,
that's the chart.
Look
Yeah.
at this. Like if this one goes too, so now this is basically credit spreads.
Mhm.
I'm just looking at high yield bonds versus treasuries here. If this goes failed breakout too, you're just running out of good things to point to. You know, JC was saying, oh, but Europe, yeah, Europe's great. Let's look at the strongest index in Europe. Well, this could go fail breakout too, like right here today. So even
Doesn't this go to like if Europe is what you're holding your hat on and they're hanging your hat on, then like
you
come
know,
on, right?
he talks about I wish I should say this with him here, but he says crypto doesn't matter. It's an irrelevant market. Well, I got news for you. I don't want to hurt anybody in Europe's feelings, but talk about an irrelevant market. Jesus, it's been a long time. Okay.
Right.
So yeah, if that's the one thing left, yes, you're right. It speaks for itself. And then one more, we'll just say, you know what, here. This is what individuals.
That top is it's not good.
This is
Definitely
Microsoft. This is a big one, right? This is what
Yeah.
these individual stocks are starting to look like more and more. If this is a top in Microsoft, look, how bearish is it? I don't know. What I do know is it ain't bullish to lose
Yeah.
stocks like Microsoft. And that's where we're headed. And then if you want to talk about some of the strongest, most risk-on groups, well, here's home builders. You want to lose them in the middle of a bull market? Things are turning. They're turning fast. Pay attention. Keep those stops tight. Protect your capital, right? Your number one job is a risk manager in this game, and just survive, to play another day.
Yeah, I mean, there are times to be more aggressive than others. There are times to be, like more concerned and
Yeah,
conservative. So I think this moment to be, a little bit more conservative and wait for the data to turn more bullish again.
Not a time to be cute. Not a time to be aggressive. Not a time to jump an entry. Right?
Exactly. Yeah.
All right.
All right, let's do some recess and then we can get out of here. I got a recess.
Now that I've hopefully depressed everyone with my bearishness, I just want to say happy Friday, everyone. Have a great weekend.
Yeah. See that?
Yep.
Life ain't so bad. I don't know where y'all are, but like the weather where I am in the Northeast is turning. It was it was in the 50s several days this week. It'll be in the 50s tomorrow. Weather, the sun is shining and get outside. My recess was going to be this app. Actually, this is funny because my mom told me about it, which tells me how behind the times I am if my mom was telling me about things. But it's called Too Good to Go. It's been around for a few years. I think it's like a Dutch company or somewhere in Europe. It's been in the
company?
US. This app, Too Good to Go. Basically, all these restaurants that throw away their food at the end of the day, they're like, well, we could throw it away, or we could just like bag it up and like sell it at like cheap discounts, right?
Nice.
So like every bagel place and pizzeria near me does this, and like Whole Foods does it too as well. You can go on the app, get the other day my wife went, we got 17 bagels for like $5 from this bagel place. So you go on the app, you see who's on there, and it'll be like surprise bag, come between, if you're a bagel place, you close, so it'll be like come between like 2:45 and 3 o'clock when we're closing, and you pay on the app and you just show up and they give you whatever the hell it is that they wanted to give you. And then you go and take it home. So Too Good to Go if you want some cheap eats, Gopher's right.
A lot of food gets wasted. A lot of food gets wasted by these restaurants.
It's a lot of by me, it's a lot of bakery and a lot of pizzerias and a lot of bagels, right? Like,
yeah,
that's where I live. So
a lot of places will give the leftovers to homeless shelters and stuff like that. There's services that you'll go around, go pick stuff up, and kind of bring it to a church or some sort of center. So, but it's good. It's good to not waste food. I'm all for that. I think that's great.
That's what I got. Fonz, what's new in the UK?
I'm going to Edinburgh today.
Yeah.
So flight in 2 hours. So I'm very excited. I'm very excited to go to Scotland.
Have you been to Scotland before?
So Edinburgh is a city in Scotland, for anybody who doesn't know. Scotland, which is a country in the UK.
Right. Yeah. Yeah.
Scotland is in the UK and Great Britain, right? I don't know.
It's so confusing. There's like 4,
Yeah,
one, and then you.
Yeah, I don't even. I don't even need to like make passport for this flight, for example. So
Got it, because you're covered. The UK, you could probably go to Wales too.
Yeah, exactly.
And Northern Ireland.
Yeah. That's right.
I want to go to the UK. That's like my top place right now where I want to go visit. I want to do what you're doing, Fonz. I want to go to the Scottish moors and the cliffs, and I want to go to Ireland.
Castles.
And that's what I want to do. That's my next dream trip that is unplanned and won't happen for a while probably. But that's what
man. Do it.
Yeah.
Well, yeah, I'm very excited for that.
All right. Cool. Let's get out of here. We'll be back on Monday.
You should go to St. Andrews and check out the birthplace of golf, Alfonso.
I will try, or maybe next time. But,
I'll try. All right, everyone. Thanks for hanging out. Thanks, Ryan Detrick. Thanks, Louie. Thanks, chat. Drop us a like. We'd appreciate that. Check out all of the links to all of the research we're putting out in the description. allstarcharts.com, stockmarkettv.com. We'll see you Monday. Go make some money or just get outside and enjoy your weekend. All right?
What a week.
I can't take no loss.